Whether we like it or not, the reality is the Federal Reserve has an enormous influence over the dollar and the stock market. And right now the Fed has an urgent and fateful decision to make. It can keep printing trillions of dollars and let inflation skyrocket, or tighten monetary policy and watch the stock market crash. So, will the Fed sacrifice the stock market or the dollar, or both? Let's try to be ready. U.S. stocks were mixed Friday as investors continued to contemplate the next policy moves by the Federal Reserve. The S&P 500 closed down roughly 0.3% after attempting a comeback to end a 3-week winning streak. The Dow shook off earlier losses to climb 140 points, and the Nasdaq shed 1.3% after the day's underperformance in tech stocks. Fresh commentary from the Fed officials remained in focus, as another set of speakers offered a mixed set of commentary on the policy path forward. St. Louis Fed President Bullard said he wanted the Fed to get more aggressive and essentially front-load interest rate hikes in the near term. Fed meeting minutes released Wednesday indicated that many members would have preferred a recent 50 basis point increase in rates, and also suggested the Fed was gearing up to announce the start of its balance sheet runoff process. However, other Fed officials offered a more measured approach to raising rates. Taken together, the confluence of commentary caused stocks to at least temporarily pause their latest bout of volatility. However, in order for the markets to rally, earnings need to be better than expected. With a relatively strong labor market and economy, the markets can rally with clarity from the Fed. But what do the charts show? Let's take a look. And today we're going to take a look at one chart, is the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 447.57. Now, we're only looking at one chart because I think the weekly is now starting to dominate over the monthly as well as the daily. But we can see here the top at that level. We moved on down, bottom and basing. We moved on up. We did have a pause here, which was expected and which we talked about, somewhat consistent with that level there. I think the pause is almost over. But let's go into the oscillators and take a look. Here into volume, not going to show us too much, but it looks all right. But this to me is the MAC, and it's the key. So from this top here, things sort of moved, rolled over, and then we'd had a sharp sell-off with some volatility. We hit the bottom on the fast line at that level here. So the separation between the fast line and up here, the slow line, meant we're going to have some volatility, and that's what we had. But right now, the fast line is not only closing in on the slow line, but also the zero line, meaning it's strengthening. So the fast line into next week, perhaps at the latest the following week, should move up and through both the slow line and that zero line. So this hesitation in the market may last for a few more days, but not much longer. Here in the histogram, you can see bottom basing and a very sharp move on up, but we're at this level here, still a little bit below that zero line, but I think it will clear that soon enough. Again, the price rate of change, the fast line has moved up and above the slow line, but back under. I think it's just going to sawtooth its way back on up and through that zero line soon enough. Same thing with the RSI. It moved up above that 50 or midline, showing some strength. That too should sawtooth its way up into the territory that we've spent many months in, say in between that level here and then of course the zero line here. So as long as we continue above that 50 line, then I think things are going to be relatively strong and the markets will move up. You can see here stochastics wants to move up, and it has the fast line through the slow line and up to that 50 or midline. It wants to head up higher. I think this is a nice basing, bottoming, and then you can see that move on up. Very nice. Here into the Williams, also the maximum negativity at that point. This here showed you that things were improving, and then of course the Williams popped on up over that 50 or midline. It wants to head up. It'll go into that negative 20 to 0 territory, which is the overbought territory. It'll be there probably next week. Back on up to the price chart, one last look. Again, I think we'll see a little bit more hesitation into next week, and if there is no news surprises, I think that the market is going to continue on in its recovery later next week and the following week at the absolute latest. At least that's the probability, and at least that's my opinion. And for today, that's ChewDog Charts. Thank you.